All right, everyone. Thank you so much for joining us for another edition of our Franchise Your Business webinar series. My name is Tom Dufour. I'm the CEO of Big Sky Franchise Team, and I will be your host and lead for today. And we are going to be going over current franchise sales and marketing trends that we'll be reviewing and going through. If you're new to us here, just a reminder, this session we cover a lot of different data points in very short order and try to start out wide from a macroeconomic standpoint and then zero in down to the franchise world, small business community, and start talking about how this information and data may be impacting you and your business or your franchise offering. And just as a reminder here, if you have not subscribed to our podcasts, please make sure you do. We have our Multiply Your Success podcast with me as your host. That's been going strong now for about 180 episodes for 3.5 years. Please make sure you subscribe to that on your favorite podcast service. And then for this webinar session, we do post this afterwards up on our Franchise Your Business podcast. So if you go to the Franchise Your Business podcast, you'll find this should post next week sometime. And then our YouTube channel, we will publish this as well. So I'd like to thank all of you for joining us here today as we jump into this session. We do go quick, so please, if you have a question, comment, type it into the Q&A or hit the raise hand feature. We generally have a small enough group here that we can take and field live conversations. So I'm going to go ahead and share my screen, and then we will start to get this show on the road here. So let me do that. Share screen, and here we go. So the first one that we always like to start with is the Manufacturing Purchasing Managers Index. And I like the Manufacturing Purchasing Managers Index because it's a leading indicator. So I'll zoom in a little bit for you here. So this is produced, by the way, by the Institute for Supply Management, ismworld.org. This is just a great report they've been publishing for many decades now. And you can see here it is down at 46.7%. And so it reads, the U.S. manufacturing sector contracted in October as the manufacturing PMI registered 46.7%, 2.3 percentage points lower than the reading of 49% recorded in September. This is the 12th month of contraction. So just of note, it's 12 months of contraction, and it shows the manufacturing break-even line is 50%. So when that number is at 50, it's at the manufacturing break-even, and the overall economy break-even line is 48.7%. So we're 2 points under the overall economy break-even line. Last month, we were just above it. It popped back down again. So what does this mean? Well, it means that we're really at this close to break even. So this tension where some businesses might be feeling this, right? Or your franchisees or potential buyers might have a concern about what's going on with that. So making note that yes, it has been on the downswing, but it's not going to stay down forever, right? This will tick back up. So we tend to see this as a leading indicator. So this is just one of those that's kind of, it's down, not down a lot, but it's still down. Okay, next, the Institute for Supply Management produces a second report on the services sector, which is the largest sector in the U.S. economy. And it says that the Services Purchasing Managers Index registered 51.8%, a 1.8 percentage point decrease compared to the September reading of 53.6%. So if we look at these, by the way, that 1.8%, and then we had the PMI or manufacturing PMI, and it was down 2.3 percentage points. So around the down about 2 points. Now, the good news when we look at this is that 49.9% is the services overall economy break-even line. So you see, we're just above it on the services sector. So manufacturing just below, services sector just above. So we're kind of teetering right around that break-even on both of these reports. Next is the hospital PMI, and this is the newest report to the Purchasing Managers Index for the Institute for Supply Management. And here's what we found. It says economic activity in the hospital subsector grew for the second consecutive month after contracting twice in the previous 4 months, with 35 consecutive months of growth prior to that, say the nation's hospital supply executive. So the reading was at 52.1%. I'll try to zoom in a little bit on this chart here. If you're not able to see this and you're just tuning in for the audio, you'll notice here that this index in particular has had some big swings, and it's been I've described it kind of like a yo-yo. It's been up and down and up and down, kind of these big swings. So I just wonder if it's part of this sorting out in this post-COVID kind of world that the hospitals have been living in, where they're trying to maybe stabilize some of their supply purchases. So anyway, interesting to see. Nonetheless, it's up at 52.1%. That 50th percentile is that break-even line that they talk about, and that 52. So it's just over that break-even, similar to the services segment. Okay, next up is we're going to talk about the United States unemployment rate. This is from tradingeconomics.com on their unemployment rate. And the unemployment rate ticked up just a little bit for the month of October. So September was 3.8%. October is 3.9%. And it reads here that the unemployment rate in the United States increased to 3.9% in October 2023, slightly exceeding market expectations in the previous month's figure of 3.8%. This marks the highest jobless rate since January of 22, with the number of unemployed individuals rising by 146,000 to 6.51 million, while the count of employed individuals decreased by 348,000 to 161.2 million. The employment rate was down to 60.2% from September's 60.4%, and the participation rate edged down to 62.7% from 62.8%. Since their recent lows in April, both the unemployment rate and unemployment levels were up by 0.5 percentage point and 849,000 respectively. So, excuse me, what it sounds like to me is that while unemployment has ticked up a little bit, it's relatively unchanged for the most part. To me, it's still very low, and just trying to continue to increase to add people into the labor pool and getting people back into it here. Okay, next up is inflation. So the inflation rate was down to 3.2% in October. And this is from tradingeconomics.com for the U.S. inflation rate. It says the annual inflation rate in the U.S. slowed to 3.2%. Thank goodness. And again, remember, what I like to show is 3.2%. It's 3.2% from the 7.1% last year. So it's 3.2% over a 7.1% increase from the year prior. So anyway, it's still a big, it's still an increase, but it is nice just to see that it is slowing down. That's a good thing. And it says the annual inflation rate in the U.S. slowed to 3.2% in October 2023 from 3.7% in both September and August, and below market forecasts of 3.3%. So just a little overview. And the good thing here, when we look at inflation, it's just nice to see that it looks like, hopefully, it's starting to stabilize, and that it's going to normalize closer now to these numbers that we're seeing, and hopefully continue to tick down a little bit for us, and help give some stability there. Okay, this is the sentiment survey of consumers from the University of Michigan. This is the Index of Consumer Sentiment, and this is their 50-year program. And you can see here that last month, here it ticked down just a little bit. It had been trending up since the end of 22. You can see for most of the year it's been trending up. It did drop down here somewhere around what may have been a few months back. But nonetheless, still up on the year as a whole, and hopefully we'll see that maybe next month we'll see it kind of zig back up. But we are seeing an upward trend of consumer sentiment. Well, what does that mean? That means consumers are more confident or likely to be out and making purchases. So that is just an overall good sign to continue to see that it's still up. It did dip down this month, but the overall trend seems to be going in the right direction. Okay, next is from the U.S. Census Bureau, and we take a look at their, excuse me, new business formation statistics. So this was just released November 13th here, so a few days ago. And this shows the new business applications that were filed aggregate by, it aggregates all the state's new business applications that have been filed. And in the month of October, almost 473,000 new business applications were filed. And so it's just astounding. We're fast approaching almost 500,000 new business applications. And that's just in 1 month across the country. And so what this says to me is that if you're in franchise sales, marketing, people are thinking, they are forming new businesses. They're starting companies. They've got new startup on the mind. So if they're looking at your business, buying a franchise, if you're a franchise broker, if you're a franchise salesperson, marketer, the people that are inquiring have new business ownership on their mind, and these statistics indicate that. Look, since COVID, you can see it's been over 400,000 new business startups just every month outside of one or two here in late 2020. Outside of that, you can see it's been over 400,000 when prior to COVID, it was bubbling right around that 300,000 new startup window from about 2018 all the way up to the start of 2020. So for 2 full years, it was around that. Now we see we're starting to trend the last 6 months of this year. We're starting to see this trend of pushing closer to 500,000 new business. That means people have this on their mind. So when in doubt with your franchise prospects, inquiries, people that are coming in, they are thinking about buying or starting a business. They want to be the captain of their own ship. So make sure you're reminding them about how your franchise can help them do that. Okay, next up on our list is the new business or the Small Business Startup Sentiment Index. This was released November 8th, 2023 by Franchise Ventures. I love this survey they do. And their heading for this month is Prospects at Prime Entrepreneurial Age Leaving Full-Time Jobs Are the Core of Today's Business Seekers. And it says, this first paragraph right from their report, it says almost 62% of survey respondents either agree or strongly agree that now is a good time to start a business. The sentiment is essentially flat with September. Now, 83.3% of respondents see conditions for business startups the same or better in 3 months. In October 2023, 53.2% of entrepreneurs plan their startup for within the next 3 months, and 73.8% within the next 6 months. And 65.7% of entrepreneurs surveyed say they are more likely to launch their startups than 3 months ago. So what does that mean? That means when I shared that data about new startup business data here, we can see that this growing trend of new business filings, right? New corporations, LLCs getting started and filed with the various states. Here's the sentiment. This is more of a qualitative approach. So this quantifies what we're saying is there are more business startups, and this qualifies that. The people who are getting surveyed are saying, yeah, I'm more likely to do it right now or in the next 3 months. So time is of the essence. So have that sense of urgency if you're talking to prospects. Right now, it is a hot time to be doing this. So or for franchise prospects, they're thinking about this. So that to me is an exciting time, an exciting thing to think about. Let's see, 32.1% say their startup timeframe is next month. That's a huge number. It's the highest percentage here, right? If you look on this graph here, the yellow bar on the bottom or the green bar on the bottom is that want to start next month. 32.1%. That's the largest percentage. The yellow bar is the next 2 to 3 months. 21.1% said 2 to 3 months. 4 to 6 months is 20.7. 7 to 12 months is 8.9. And then this top bright blue bar is, it looks like 7.3%, and that's longer or they don't know. So about 35% or so of the respondents are looking somewhere beyond 4 months. But that's 35%. So we're talking six, or I'm sorry, beyond yeah, that's right. So anyway, just some interesting information to be looking at if I did my math right there. And then this is one of my favorite charts from this report. It asks, what are your biggest factors determining whether or not you're going to go into business? What's holding you back, or what's impacting your decision? Why are you hesitating or not sure? Well, the number one reason by a landslide or by a large margin is they say it is funding, 66.7%. So essentially 2/3 of every new budding potential entrepreneur said funding or access to credit is their biggest factor to getting started. So what does that mean? Well, I reiterate this every time. If your franchise system can offer any kind of financing, funding, uh, uh, anything to support them, whether it's through third party or in-house or however you want to do that, to make it a little bit easier for your franchisee to get started or prospective buyer to get started, it's going to greatly increase your chance for getting them going. The number two reason is economic climate. 41.2% said economic climate. And then the number three reason is political changes at 18.6%. And then the stock market at 17.6%. Regulatory changes, 16.7%. So you can see that all less than 20%, there are only two factors that have more than 20% of respondents said anything about. And the big one is that funding or access to credit. And then economic climate is a concern. But that number has been pretty consistent. You can kind of see here, it's kind of ebbed and flowed somewhere in the 40s, somewhere between about 45-ish% on down to maybe about 30% and back on up to about 40% here. So that one's kind of been swinging. So just some things to be thinking about. And then I like to show, let's see, it says here 52.9% of aspiring owners leaving a full-time job. So when you're talking to people, you should see that half or just over half of all the people that are inquiring are looking to quit their job to buy a franchise. And 14.7% of these folks are current business owners. So about 15% of all your leads are going to be people who own a business. They're looking to get into that. So just some thought process or some things to think about there as you're looking into that, and just to be aware of. And then lastly is the age of our buyers. Gen X is still the number one category, or the number one age group of people buying a franchise. That's not a surprise. Usually you see that most franchise buyers are going to be somewhere between that about, 40 to 60-year-old range is what you generally see. And that's why we see this millennials at number two at 26.5%. And Gen X at 54.9%. And then you've got the baby boomers at 17.6%. And then the silent generation and Gen Z are just a very, very small percentage at this point. So those are the three big categories right now. All right. Let's take a look at the top. This is from the Franchise Ventures. It looks like they mixed up their categories for this month, but the top categories for franchising are home services, 29.8%. Of all, and this is from franchiseventures.com. This is the top 10 list, and it shows home services at 29.8% of all inquiries that came through all of their sites. Almost 30% were for home services. Number two, senior and healthcare at 11.7%. Number three, cleaning and maintenance at 11.6%. Number four, food and restaurant, 9.9%. Business services, 9.7%. Financial services, 5.1%. Real estate, 4.5%. Child related, 3.3%. Education, 3.2%. And pet services at 2.6%. So you can see those top five categories really are all five of these are either at or just under or above 10% of the inquiry for the leads. Okay, let's talk about a couple other trends in franchising. One in particular that we got an answer on, the joint employer rule on the decision that was made by the National Labor Relations Board, the NLRB, made its decision on the joint employer that basically leaves things open-ended. And this was a decision that happened here just a couple of weeks ago. And so I'm pulled up the International Franchise Association's website at franchise.org. And so the IFA has been working with Congress to try to create clarity around the rule to make franchising specifically exempt from this joint employer reading because it has its own structure that's already been predetermined. So the heading says IFA applauds bipartisan Congressional Review Act effort to overturn the joint employer rule. So essentially what they're saying, and this was released November 9th and written by government relations team there at the International Franchise Association. And essentially what they're trying to do is to, through an act of Congress, to put in place laws or rules that would make franchising be able to stand on its own and not be subject to the National Labor Relations Board ruling on how it's defining franchising. So we'll see where that goes. This has been a long process. It's been 10 years plus. I mean, this has been an ongoing thing. So I anticipate this to be an ongoing thing, just, but these are some recent decisions and things that have happened that we've been waiting for things to go on. So just so that you're aware. And that really is just something for you to know about, as that it may impact over time what you're able to do or not do with your franchisees. And then the final thing I wanted to share with you today, Boxwood Partners is an mergers and acquisitions advisory company. And I just thought it was interesting. They've had 3 major transactions in the last, really in the last week that they've published. So I just thought it'd be interesting to note. It says, Boxwood Partners advises Industrial Air LLC on sale to Limbach Holdings, Inc. And this is at boxwoodpartners.com on their news and their press release. And it says the latest transaction builds on Boxwood's reputation as a trusted advisor. They're pleased to announce the sale of Industrial Air LLC, a Greensboro specialty contractor. So it's going through that. And then this other one here is a Neighborly brand, overhead garage precision door service. And it says Boxwood Partners is pleased to announce a partnership between Wrap Operations, the largest franchisee of precision garage door service, Neighborly Company, and Franchise Equity Partners. So they helped get that deal done. And then it says Boxwood Partners is pleased to announce the strategic growth investment in Forever Young Anti-Aging Solutions, a rapidly growing franchisor. Let me see what else this says here. This is another franchise investment, rapidly growing franchisor. Let's see. Where did that go? Oh, there it is. Wellness, an entrepreneurial investment firm building on long-term partnerships with family-owned businesses. So anyway, it showcases that my point in wanting to show you this is that deals are happening for franchise companies, for large multi-unit operators, for franchisors. So these deals are happening, and they're going to continue to happen. It's what we continue seeing in the space. So why do I share that with you? Well, if you're selling to folks who want to be multi-unit franchisees that are looking for an exit, if you're a franchisor that's looking to build and grow, the opportunity is out there for potential acquisition, partnership, venture capital, private equity. Those deals exist and they're happening. I mean, there were 3 that just happened here through Boxwood Partners, just one company that publishes their information and tends to have a focus on franchising. So with that, I'd love to wrap this up here and open up for some Q&A. I know we've got a few folks on the line. I'd love for anyone, feel free to raise your hand or some questions or type it into the Q&A box or I think the Q&A works. Sometimes the chat box doesn't work here, guys. So feel free to ask me any questions here. All right. Well, as a closing thought, the main thing I think to take away from this session here is that the uh, overall economic, from a macro condition, overall economic activity is kind of in the middle. It's kind of blah, is how I would describe it. Some indicators are showing under kind of middle performance, just under, and some are just over economy kind of break even line. And we're seeing just kind of this hovering of things. It's just okay. It's not great. It's not terrible. It's just okay. And it's maybe what I've heard people, experts and business analysts talk about as kind of this quote soft landing of for the economy, where there was a concern about a crash landing for it, and maybe it's just this soft. It's not that terrible of a session. That's what it's looking like here, from what the data is showing that we're looking at. And then the other takeaway is so it's while there may be some concern from prospective franchisees, it may not be as bad as someone might think it is. And then secondly, and you can show them some of this data and information. And then the other part of this is that entrepreneurship and new startups absolutely is on the mind of your candidate. So if you have a candidate that's expressed an interest, there's a very strong chance they are going to start a business. So whether it's they're buying your franchise is the business they're going to start, or doing their own, they're looking at doing something and they're serious about it. And based on the timing of that franchise sentiment survey, they want to do it now or the next 3 months. And the end of the year, we tend to get a lot of that. We get a rush of activity of people thinking, "Oh my goodness, 2023 is just about over. I got to do it." And then we'll often see that rush right at the beginning of the new year. So we have a high sense of urgency from people that are coming in. So now is the time to be reactive or to be proactive in communicating how you can help facilitate and make an easy, smooth. You may want to be communicating that to your prospects. Now, tell them that you can make it a smooth and easy process for them to go through to get started as soon as possible. So that's what I have. I don't see any questions here today, everyone. Thanks so much. I really appreciate you being here. Hey, no session next week. Happy Thanksgiving. Thanksgiving is my favorite holiday of the year. I really hope that you pause and take a moment in the midst of the hustle and bustle of having guests over, family, friends, eating turkey, hopefully eating turkey and lots of and mashed potatoes and stuffing and so on. And I hope that you take a pause to give thanks for all that you have and all of the people that you have in your life. And I just want to give thanks to you. Thank you for being part of our process and being involved with us. I'm so grateful for you being here and taking the time out of your day to listen to this. And I hope to continue to add value to you. So thankful for you. And have a happy Thanksgiving and have a great rest of your day and a great weekend. Thank you, everyone. We'll see you here in 2 weeks.